Hello. This is Autumn Augustus with Realty One Group Prestige, and I am so excited to be here today. It's beginning of May, and there's been some really exciting banking news going on. So I thought I would invite my mortgage broker friend, Bill Youngblood, here. He is a mortgage broker with eMortgage Capital. And we were just going to go over a few of like the burning questions that I've got because I'm a realtor, but I don't really have, you know what all of these numbers mean all the time. And so we're going to ask an expert and see if it's still a good time to buy in the Portland, Oregon vicinity. Will, do you have anything you want to start with the intro?
Well,
Or
first off, thank you very much for having me on, Autumn. I appreciate it. Yeah, it's an interesting time in finance, and it is absolutely critical that people look at this market in terms of buying in the dip, because if there's a lull in the market, you can take advantage of it, and that is just par for the course. Investments, and even if you're looking at your first, second home, it's a great time to do that. I mean, I know the rates aren't attractive, but anything you're jumping into right now is going to be a reinvest. You're going to refinance it in the next few years. Right now, the Fed is currently they're discussing whether or not there's going to be another rate hike. And let's move to your questions because I think this will fill in a lot of blanks.
okay. Yeah, so my first question is totally burning on everyone's mind. You know, Silicon Valley Bank went under last week, and this week it's First Republic Bank.
Mhm.
And
Bank Swiss, and yeah, there's
should
been
I
a
be
handful. Yeah.
should I be scared? Should I pull all my money out? Should
That
I
would lead. That would
worry?
definitely. That the first point of that, pulling your money out of the bank leads to the landslide, and that is not a good thing. So, obviously, if you're with a banking organization, whether it's regional or international, like doing a credit union or even one of the big kids, by pulling your money out, you're literally destabilizing the banking system because the way they loan on like that 90% margin, so they can load 90% of $100 back out if they have $100. That's kind of how it works. Now, with that in mind, Silicon Valley, the way they crashed, according to all the news and all the reports that I've seen, they made some investments into the bond market, and they also spent a lot of money crazily, and they were not really doing what they should have done in terms of quality control and what they were taking care of as far as their investments. They were doing a lot of venture capitaling, but the Fed rates didn't help them because like the Fed rates went up and the bond market didn't like reciprocate. It didn't balance itself. And that's where they normally work. So they were upside down in a bunch of bonds and they lost a lot of money, which in turn created their collapse, which was a huge contributing factor. Moving forward to First Republic, I'm not sure if they were leveraged similarly, but that was one of the things I was wondering about all these about the banks, if the bonds were that they invested in, because all of a sudden maybe it's something they bought at a lower price. In order for them to get out of it, it costs them money instead of they get paid back out of. Well, that's the problem with JP Morgan absorbing First Republic. I don't think you're really going to have to worry about it. JP Morgan absorbed Washington Mutual, what, 15 years ago? Same kind of thing. Chase Bank, all that. That's J.P. Morgan, just to clarify.
Yeah.
I wouldn't be concerned about their solvency. But then again, this is my opinion. I am a financial. I'm not a financial advisor, but I do loans, and I do have an opinion. I'm an American, and I do a lot of reading. So that there's that. Does that kind of clarify? Like you shouldn't worry
Yeah.
about.
Plus, I'm not a millionaire. My couple $1,000 is not
It's
is
FDIC insured.
anyone's,
Yeah,
right?
you're
Yeah.
guaranteed getting that money. Yeah,
Yeah.
yeah.
So I don't have to worry about that anyways.
I
And
mean,
I've
there is
got
a
holding
huge
bonds
question
and
about crypto, though. That's like there's a huge because there was a bill or an executive order, and I've read a little bit on it. I'm not 100% clear that they're trying to move to a crypto standard rather than like the U.S. dollar, like it's going to be transferred over. There's some interesting things there, and I think that's a developing story. I don't feel like I have enough information to speak intelligently about it, or maybe I'd be speaking unintelligently about it. So
right. Yeah. I mean I've dabbled in crypto, but
I
um,
think we've all dabbled
have
in
most of
it.
my money in the banks, and
hmm
I think that yeah, I tend to agree with you. I think we're gonna be alright. Hopefully they know what they're doing up there in the
Well, they have a vested interest in the
yeah,
survival of their bank or in the economy because it's kind of like when we talked about during open houses and our just extensive discussions about property taxes. It's the same idea. The government never wants to lose, right?
right.
So, there's a vested interest in maintaining the value of your house because it keeps the money coming in. So, unless something drastic happens, like a 2008, which is hyper unlikely, that's happened once in 100 years, then we
Well,
should
and
be.
the mortgages they're holding right now are they're a lot more quality than they were back in
The
2000.
loans are stable. Like the 30-year
Yeah,
products, the ARMs, everything that I deal with, they are extremely decent loans. They're not designed to upend the client. And I mean there's always bad products, always. And that's why you work with a loan broker that is capable and has a lot of access. So like with where I work, we have access to the most lending programs I think of anybody. So I have a lot of options, and I get to do a lot of research, and I can find a loan product that's going to work best for the scenario for that borrower and take care of them. That's really the bottom line, because you only get to take advantage of somebody once, and then your name is mud, and you never want to do that. You always got to take care of everybody like it's a family member, or better, I guess.
okay. Well, that kinda leads into my next question.
hmm
So I'm still trying to get a loan, and I'm wondering are the requirements gonna get harder? Is it gonna be even harder for me to qualify for this mortgage than
Oh,
and
sure. So you're 1099, correct? You're
um, I'm a little bit of both.
Okay, okay, that's right. Yeah, I understand.
Uh-huh.
So from that perspective, there are obviously a lot of loan programs that are available, from bank statements to the W-2 specialties to investment loans, and we've talked about them at some level. What it comes down to is there's even down payment assistance programs. So you get 100% financing, which means you have a first lien position loan for the primary on the house, and then you have a second that's for the down payment. So if you don't have a lot of money, you can get this done. However, you do have to fall within debt to income requirements, and that is a conversation that you have to have. It's kind of like, what are interest rates? It's like, how much does a car cost? It depends on a lot of factors, and
Mhm.
that's where we have to get into the nuts and bolts of every aspect of your finances, so we can set up a file that is successful. Now, to the point of things clamping down, I think currently everything that I'm seeing, lenders are being more aggressive, right? They are more aggressive. They are getting programs out there that are trying to help the people get into homes because they want to make money. Okay, so that's money. Banking is money, we know
Yeah,
that.
and if the businesses
However,
go down with the higher interest rates,
yeah,
people just
and
bail.
you have to help people.
Yeah.
So they're saying, well, if the interest rates are super high, well, we need to figure out a way to get them qualified, and we're going to make some concessions, and we're going to try to make some things happen. Well, that's what they're doing. There's like I said, there's so many programs. There's stuff that does like the self-employed that works on deposits on their personal account, that doesn't take into account the 50%, sorry, the dog's jumping around.
Oh, yeah, that's
um yeah, the 50% cut to manage DTI. There are a lot of pieces of that puzzle, and like I said, it's all dependent on the debt to income, the amount of income you make. There's it's just it There's a
you
matrix,
kind of
and what
gotta
I do is
kinda gotta analyze that on a personal level with, like, an actual
Mhm.
phone call
It's
with
absolutely personal. I mean,
Mhm,
every file is individual as your social security number or your ITIN number. It's that, I mean, because it's kind of like if I were a shoe salesman. I've got lots of boxes of shoes, right? And lots of different types. There's people that wear a size 13, there's people that wear a size 6. Those are the specialty products, right? But the people that are like that 9, 10, there's a lot of and those are like the average size. Those are the easy products. I have a
mhm.
lot of the ones in the weird product size, which is the reason why I can get the better rates, the best opportunities for the borrower, and set it up so when you're working with Autumn, you're able to go purchase with, well, you can make an offer with confidence, and she knows that you're good to go. When you're able to make an offer, you're able to purchase the home.
Yeah, that sounds like some great news that it's actually, like, gonna get a little bit easier, that you're putting out some good products for everybody instead of just, like, making someone fit into your cookie. You
Yeah,
can
it's
find
not a
out.
cookie cutter industry for sure.
Yeah.
There's just boxes, where your foot fits in, right?
Uh-huh.
And then on top of that,
Oh, and I like the purple one, so
oh yeah, there you go. Well, the upside is that I listen to like so United Wholesale Mortgage, Matt Ishbia, he's the guy that owns the Suns, so obviously he's making some money. But
mhm,
he put out some information. He said that there's a good chance, at least from all their indicators, from their brain trust, they're thinking that there could be some rate reductions in the near future. So we could see a dip in the market. We could see some things happen that could really help borrowers. Now, what they've also done is so let's say we have somebody contact you and they want to get qualified for a loan. I have what loans are reduced and increased and called BPS, and so I have 40 bips that I can drop your loan, which is like 0.4% of the value. So I can lower your interest rate by that much, just to help you out working with you. So, and I've got a few of those that I can do this month. So if it's something that if you want to work with Autumn and you want to contact her and work with me, then I can help you out.
fabulous. Yeah. Do you think, the housing, prices here in Portland are still gonna stay high like they have, or do you think they might drop a little bit more?
Now I have shaken my magic 8 ball many times on this. And what I can tell from my current experience and what's happening with the construction market and all those things, building permits are slow to come out. There seems to be a big push more toward multi-home dwelling like apartments and not as much stick built. So I don't know if the home prices are going to dip as hard as maybe we would be benefiting to. I guess our
Mhm.
benefit would not be it would not be to our benefit, right? I don't think the housing prices are going to dip hard now, but we are in a position where the buyer is having, you know, they're not having to eat the closing costs. They're getting the concessions from the seller now, versus what it was, like, a year and a half ago
Yeah,
when the
that's
rates were
something
lower.
I've
And
seen in my brokerage too, that
yeah,
we've been having buyers ask for more of their costs paid for, and they're actually getting it, where in the previous
well,
years, that wasn't even on the table.
yeah, because with the conventional you can get 3%, with an FHA you can get 6%, then you can get mommy money and all that stuff. Like if in terms of like gift funds, there's a lot of games that can be played, or a lot of tools that can be used. They're not games, okay? There are tools that can be used to get the buyer into the home, and that's kind of the trick. Well, with the current market, like I said, with the flip that I was involved with here a few weeks ago, I saw that that they had to do a reevaluation of pricing to break even versus what they would have made on another product, another home. And it's for no other reason than the fact that the Fed rates are high, and that means that the mortgage rates, it gets more expensive every month because that's how it works, in terms of what it costs to lend. And the expectation of the seller was like, well, I want to sell this for X number of dollars. Well, the reality is the market's not going to bear that, because or the market or the home or the property is going to set on the market
Or it's just a
indefinitely.
matter of that you have the buyer coming to you and they're like, "Look, this is the max of what I can afford at
Yep.
these rates, so take it or not." And they're
Well,
like,
the reality is see, this is the best
"Yeah,
part about our job, right? And this is why I love my part of the role, and then there's your role. My
uh-huh."
role is I can determine whether or not the house is within a spectrum of whether or not it's going to probably appraise, right? So the idea is this house is worth, you know, $500,000, right? And I pull up a cost market analysis and I go, oh yeah, okay, so they're right in the median. That's right there, right? And I know pretty much with certainty. I figure out whether or not the client can qualify for that. That's all part of the process. And then I look at you in in all the hope and all the wisdom, and I say they can do this. The house will probably appraise for this. But if they have a home that's worth, they're like, well, we're going to sell it for $700,000. You get to go do the knife fight. I don't have to. You get to go to, and so basically, she's the one with the sword and the loincloth, and I just get to go hang out with the calculator, and we get to figure it out. So I get to work the file, and then she gets to go to war, and she gets to get the house for you. So that's kind of the cool part. That's the relationship between the lender and the real estate agent, and that's why you have to be represented by a good real estate agent and a good broker, because otherwise the deal can easily collapse somewhere in the middle.
Yeah. Yeah, and we try to, like, have good communication throughout the
Oh, for
whole
sure.
process and keep everyone apprised of the situation, and yeah, um, yeah, I think it is still a good time to buy.
Hmm.
I'm seeing, some, great inventory coming up that actually is a little bit lower than I was seeing, even this winter.
Hmm.
I mean, well, this winter there was pretty lean, and so, summer there's more inventory and
Well, we're coming into that time of year, and the reality is that, okay, so anybody who's watching this, look deep into my soul right now and realize that, exactly, you look deep into my soul when I'm saying this, that investment properties and real estate. Okay, if you're able to get into a home, if you're able to purchase an investment property, that is the way to gain. I hate to say the word generational wealth, but the reality is that equity base from real estate is a faster growing margin than what you get from the stock market or from crypto, unless you have some lightning strike inside, trading kind of thing going on. You are not going to make the kind of money you make off of real estate. And
yeah.
that means that if you're purchasing a home and you're saying, hey, I'm going to stay here at least 2 years and I'm going to be outside the capital gains. So you're not going to make passive income. If let's say it's a rental. Let's say you go buy a duplex and you go, all right, I live in one half of the duplex. Well, you get to use 75% of the income that's rated on that place to add to your income to determine whether or not you can even qualify to buy it. So that's one step. And it's just a big plus because that helps your bottom line. But secondly, you have a piece of property that becomes it helps you pay the mortgage to start with, the other side of the building. And then as time goes on, mortgage rates fall below rental rates, then it becomes passive income. That property at the same time gains equity value. And generally, what I'm seeing in a lot of the houses, they're going up 10, 15, 20% over the course of 2 to 3 years. There is no investment that works like that. This is like the easy mode way to
Even
make
those
money.
bonds aren't
Yeah.
gonna hold
No,
like
nothing works like
yeah,
that.
no, yeah.
So, yeah, I mean, it,
Time in the market
yeah,
beats timing the market.
yeah,
Absolutely.
I mean, equity is the way. So when you look at your investment, you say whether I'm buying a home as my primary residence, a secondary home, whether it's vacation, or if I'm looking at an investment property, you say I am gaining equity. That is my goal. So when I'm purchasing a place, I'm looking at where it's at. I'm talking to my real estate agent. I'm making decisions based on, this is the basis of where I want to be. The real estate agent looks at all the factors. Like Autumn will look at all the factors, say, you know what? This area is going to be really good for you. This is exactly what you're looking for. And they're targeting the location and they are saying, all right, well, we pretty much know this place is going to gain value. And you know that in 2 to 3 years, and most people don't live anywhere more than 5 to 7 years. So in that timeline, let's say you gain four or $500,000 in equity, which is very possible in the Portland market. Think about that for a minute. $400,000 to
And
$500,000,
if you
depending
just
on the price
wait
of the home.
4 or
Yeah,
5 years to buy, you're super gonna be priced out. If you think you're
yeah,
priced out now,
yeah. And the
what are
thing
you
is,
gonna do
like
when,
putting money in
like,
a piggy bank.
the
Yeah.
three-bedroom house is $1,000,000?
Yeah.
Like,
Yeah, it's, and the reality is that when you're paying that payment, when you're paying the payment on your mortgage versus rent, rent is like burning the money. You are literally taking anything other than interest, the principal is going against and paying the house down, and the equity that it's gaining, you are making money in the process because you'll get all the money you paid in against the principal back when you sell the home. It
yeah,
is kind of a, it's, the hard part is swallowing the first part of it where I've got to go buy the house. And you've got to be in a position where you're saying, hey, I'm going to live here for the next handful of years. And I think most people can make that commitment because people don't generally just pick up and mob out to a different state, on a whim. Normally it takes some time and preparation to make that happen.
yeah.
So, do you have any other questions since when we were going?
I think those most of my questions. Like, I was, just feeling nervous with this banking crisis, and I
Mhm.
think you really reassured me, a lot that, like, things are still chugging along just fine, and,
I mean,
uh,
look, we
banking, I
have,
think it might get a little bit better for me and my clients,
yeah,
and
the
I'm
banking end of
really
it,
reassured.
absolutely. I
Yeah,
think the banking stuff is very stable. There needs to be I definitely feel that there needs to be some potential federal moves that's going to help with inflation, because you are seeing areas in our lives that are costing up to 20% more, or more, depending on what we're looking at. And there needs to be some evaluation that to give Americans some relief there. Um, Obviously, withstanding all the cultural stuff that's going on in the country, I think that if you're able to buy a home and you're able to be happy and live your best life, that is the best way to combat any of those problems, for sure.
Absolutely.
Best thing is to live, be your best, do your best, and just be a decent human being.
Yeah. Well, yeah, that like I said, you really reassured me. I think that it is still a good time to buy, and
Mhm.
I'm definitely looking, and I'm ready to help a whole bunch of other people get into their dream homes, or even a starter home that's on the way to their dream home. Sometimes you don't get to buy your dream home the first off, but still, time in the market beats timing, and it's better to buy than rent. And
Well,
yeah,
anytime there's an upswing, you're making money, and if
hmm
you buy in the dip, you're guaranteed to make money.
yeah,
And it sounds crazy because you're like, oh, it costs a lot of money to do this, but it's also like, well, this is how you make money. This is literally but you got to get your feet wet. You can't just stick your toe in the water, because at a given point you have to commit, whether it's not the house you're looking for, whether it's a townhouse, a condo, something that has your name on it. You
yeah,
need to own something. That's
yeah.
the key.
Better
Okay.
to own a condo than rent that apartment
Yep.
because
Yep.
at least that money you put on the down payment is basically
Means.
like money in the bank.
Yep. You get
No,
it back. You will
yeah,
get it back.
mhm,
With rare exception, they would be with rare exception, you are going to get that money back plus a lot more. Probably another 23 to 25%, depending on how long you wait.
yeah. Well, awesome. Thank you. Again, I'm with Realty One Group Prestige here in Portland, Oregon. I am getting my license in Washington too, and we can look for houses all over. And I really trust Bill. He is a great numbers guy. Where my strength is kind of people and negotiating, and his strength is the numbers, so I can lean on that and not have to worry about the math,
Well, I
which
appreciate that.
yeah,
My name is Bill Youngblood. I work with eMortgage Capital. You can reach me at www.rightlendingteam.com, or you can contact me directly at w.youngblood@emortgagecapital.com, and that is my email address. So anything you guys need, anything like that, I'm more than happy to help, and I will definitely try to get Autumn directly to you. If you hit me up direct, I'll put you in touch with Autumn, and we can go house hunting.
awesome. Well, yeah,
Thanks for having me on, Autumn. I appreciate it.
yeah, thank you. This was great. We'll do it again.
Awesome.
Okay, bye.